So for this live profiling Q&A session, I mean, this session is really for you. It's for you to some of you are exploring the profile as a tool to help you make trading decisions. Some of you are familiar with the tool, believe in what it can show you, trying to figure out how to turn that into action. But you're just looking for a place that you can get some feedback and ask some stuff about either profiling or about trading specifically, or anything specifically. And so this hour is for you. Typically on these Fridays, we'll have kind of a concept that we cover that's kind of where our trading community is at in the coming week, what we'll be looking at. And so you can kind of see where we're going and see why we're going in that direction, if that interests you. But also just to ask any other additional questions. And if we can find a trade, part of doing this during live market sessions is to be able to find trades at the same time. So with that being said, let's jump in, shall we? Trading, which is a very compressed cycle of business risk and investment, it does have risk, and you need to be mindful of that. We'll talk later about methods to practice and work on expertise and how risk factors into that, and always being mindful of the risk, because that is the only thing that we can absolutely control with the market. This is me. I'm Josh Schuler. I'm the founder of Trade Profile. Founded this. We're almost a little more than a year and a half old, and really we're a firm that is on the edge of we're focused on skill development. So there's kind of three places that you do trading development. One of those is around, like, can you get consistently? Can you have a consistent edge? That's the first step. And the second is expressing that across multiple markets. That's breadth. And then the third is performance. So we're very much in the edge development and consistency space. JP will be on the call with us hopefully here in a little bit, but another part of our team, and brings a lot of expertise as well. And today we're looking at, just to start our discussion, is to use the profile to see the move before it happens. How many times have you're like, oh man, I saw that move, and you kind of kick yourself because you're like, man, it would have been great to be on that move. It's everybody can see the move after it happened. Everybody can see a trend after it's developed. The challenge is, like, how could I be part of that before it happens? And what's fantastic about the profile is it actually allows us to see it. It helps us, with this specific challenge, is how can I be prepared for an auction to start a move and then feel confident to join it? And then, when is that move over? When am I getting too late? And this is what we're going to be looking at next week as part of our development pathway. Our process is that every week we're working on a specific focus to round out our understanding of how the auction behaves so that we can express risk inside of that. And it starts with the how do I understand how the auction works, how these continuous markets work first, and then once I understand that, then I know how to express risk around that. Specifically, next week we're going to talk about the concept of balance and excess. Now, these are uniquely auction market theory terms in terms of nomenclature, so it could be a little bit of a jargon, but the idea of balance, you might have been familiar with the idea of a consolidation or sideways trade, and excess could be the form of, here is a buying tail or selling tail. You may have seen that kind of nomenclature. But as part of our objective focus area, so everything that we do is around these three objective areas. So one is to be able to see the 4 behaviors observable in every auction and how to observe them, the 4 questions to ask before entering a trade and how to answer those. So there's 4 questions that we ask and answer before we ever put a trade on, which all of that culminates also with auction competency. So there are stages of development that take place in anyone who's trying to acquire skill. Stage 1 is an unconscious incompetence. That's that you don't know what you don't know. Stage 2 is a conscious incompetence. It's like, oh, I know that I don't know some stuff. Stage 3 is a conscious competence. So you have something you can lean on and it works. Just feels clunky at times as you're trying to find mastery over it. I was having a conversation this morning with one of our traders who, he's working through the system. He's doing the reps, he's doing the work, and it just feels clunky and unnatural. And that's because it just hasn't been ingrained. That's where you get stage 4. Stage 4 is where it just feels like breathing. It just feels rather instinctive, and that's where a lot of the fun is. But it takes time to get there. But with this, respect of this challenge of seeing a move before it happens, or knowing when it's ending, here's the risk to a trader that doesn't understand how to see this: is that you're gonna end up entering too late and taking on heat and getting chopped, etc., or you're going to exit too early. And how many times do you see somebody say, well, I'd do much better if I would just exit or enter earlier and exit later? Which, I always, and I even see people with like pithy quotes that are like, oh yeah, all I got, you just, cut your losers, let your winners run, and which, sure, it's not really helpful. So how can we look at this in a helpful way that we could lean on? And fortunately, the auction provides for us this principle, which is that moves initiate from balance and end in excess, which is at the heart of what we call a complete versus an incomplete auction. So if I think about an auction, auctions breathe. Let me pull up a whiteboard here. This will be helpful. At the heart of the profile graphic and what we're looking to see is auction behavior. So if there's a range of price, if this is a range of price that we're looking at, we're going to find some price in between this range that is where most traders find agreement over price. And we call this the point of control. That's the fairest price. It's the price where we found buyers and sellers willing to be active. Well, outside of this, above this, in a complete auction, we're going to find a place. The auction is going to end to the upside when it runs out of participants. Okay, same thing to the downside. So this is why the profile graphic often looks like a bell curve like this, and it follows the behavior of statistical distribution. And the idea is that there's a statistical mean, and that a balanced statistical distribution has about 70% of the data set inside of this range, and then everything outside is an outlier. Okay, so a completed auction, it runs, this is what we call excess, is where the auction has run to a spot where it's no longer can facilitate trade in that direction, and it rotates back to the middle. The middle is the area that we call balance. Okay, so a move always starts from here and moves end here, right? Which seems simple enough, but let's look at like some tangible examples. And if anybody's following us on Twitter, in fact, let me I'll pull this up so that you can see. I actually shared this with our team in Slack. Let me just find the graphic real quick. Yeah, here we go. So this is what we call a merged profile. This was looking at the NASDAQ futures auction from January 15th till yesterday. And notice exactly what I just showed you, is that we have a bell curve auction. We have an area in the middle. This is multi-days. And then you have an area where most of the data set exists, and then you have excess to the upside, excess to the downside. So where is a move going to start? Move is going to start. We know that there's a move coming. How do we know there's a move coming? Because we are at balance. When I took this snapshot, we were right on the middle here. Okay, now let's go over here and look at a live market today on the NASDAQ. And in fact, let me do this, because this will be helpful just to see this. Let's go back to that 15th, and we're going to merge everything except for today. Yep. Okay. What do we see? We see that the move started in Globex last night and is continuing here. So moves begin from balance. We knew a move was coming. We just didn't know which way it was going to come. So this can set your expectation. When you see an auction that is going this way, then you know a move's coming. Now, how do you take advantage of this? Well, we had a gap higher today, so this is just one of the ways that you take advantage of this. So let's say that you were more of a swing trader, and you're looking to benefit from this move. You know, the challenge becomes is how can I express risk around it? That's what you're trying to do, is express risk around it. We have a gap that did not close after the first hour, so that gave you a really tighter risk parameter here at 67.40 that can be your stop to be long on a multi-day time frame in this auction. If we come back through this 67.40, guess where we're going to go back to? We're going to go back to the 66.85. This is why if you're ever around profiling traders, they feel like they talk out of both sides of their mouth, because they're like, well, I can't tell you which way the auction's going to go, but it's going to go here next. And the reason for that is that there's both there's consistent expectation of how the auction behaves. We just don't know necessarily in what direction it's going to hit these levels, but we know, oh, once we've seen this, then we can see this kind of an if this then that type of behavior. So that's on a multi-day. So you can see now we're moving away from balance into this excess, and so we'll see if the auction can continue to facilitate trade. Now that's a multi-day. If we go look at today, other things that are supporting being long, I have buying excess here, okay, and then I have intraday balance. And then see what's happening here is the auction is trying to move higher, but what's it forming? It's starting to form some excess to the upside. So if I think of like, where's the completed auction? You know, I've got this decision level up here at 68.10, and this is we were talking all morning about this level with our team, and it looks like a really great place to see potentially this auction exhaust, which would complete the auction today, which takes into account both today and the multi-session. So this is the kind of stuff that we'll be focusing on next week, is, you know, how to look and think around balance and excess, and know, you know, how can you use that to help you pick trade location. Now, this just helps you kind of even see the behaviors and have expectation of where the auction might go. Then how you trade that is another level. So for me specifically in this specific instance, what I'm looking for right now is I'm looking for the auction to get up to the 68.10 and continue to have the big balance zone down here, and then I'm looking to fade this thing back into and have a clear target back to this balance level. That's what I'm looking to do. But I'm waiting for it to get up here, not be able to facilitate trade anymore. Then I can establish really, really tight risk of, like, say, hey, 3-5 points, target 20 to 25 points. So my reward way outstrips my risk to be into the trade.
Looks great.
Yeah. There's JP.
What's happening?
So that's kind of a quick preview of balance and excess. You know, the outcome of what we'll be talking about next week, you know, in our pathway is, you know, the ability to, if you can observe balance and excess, you know how to include those behaviors in your trade decisions, then you know when to and when not to trade. We had, you know, we were on a call this morning. A lot of what we were talking about is how patient we end up being. You know, we just kind of have to wait a lot. But we can also identify areas of price that we want to be in and not, and that allows us to work on other stuff, get a workout, read a book, and only be active when we need to be active.
Tell some good jokes.
Tell some good jokes.
We had some good laughs this morning.
Yeah, we had some good laughs. So with that, open the floor. Any other questions anybody have, whether it's about, you know, what we'll be talking about next week, or anything regarding profiling, trading that we can be helpful. Happy to use the balance of the time for that. And if this trade comes in here, we'll look to see So right now I'm looking to see if I can get to 68.10. I want to find a short time trigger to get back to 67.88. That's the trade I'm looking for there.
Pop it into your 68.10. We talked about that this morning.
Yep. ES didn't get low enough for me, so I'm just kind of still waiting there. Cattle got above the 5-day and rotated back lower.
Fats. Anybody got any questions regarding profile or markets? Why is the moon round?
Yeah. Or even if there's a market that you want to look at today,
Yeah.
and just kind of get a read on it, happy to do that.
Yep. Lots of things coming up next couple weeks, the earnings too, that may be why we're sort of drifting here on lower volume, is because we have lots of tech earnings coming up the next couple weeks. Mm-hmm. So I don't think there's too many people establishing positions into that. So
yeah, that would not be wise.
Yeah, rather not get run over by that truck.
Yep. Yeah, big neutral. I mean, another odd neutral day, neutral behavior in the bonds here. This is just, man, pinged right off the 5-day, found buyers. So that longer time frame convergence supported the auction.
How wide is that? Okay. R. Smith wants to see crude. Crude's a good day not to do anything. But yes, crude's a good. Crude is, we definitely is. We need to cover crude.
Yeah. So we have kind of two core, two different ways to look at the same setup in our trading playbook. And all the traders that start with us, we're always trying to help them define and describe the trade. So and this is an exercise for everybody. When you look at your trades, can you name your trade? And what I mean by name the trade is what would you call that setup that you got into that trade? We've got about 7 to 8 directional setups that we look at, that we name, and one of them is an IB go with or IB extension fade. So you can see we're right here almost to the IB high in crude. So we would use that extension, if we get the extension, looks like we're going to get that extension, as an opportunity to see, hey, there's buyers stepping in. Can we go with them? So that's what a go with is. The question is, go with where? So now we have the IB high extension. That's great. Where would we go? Well, and can we do that and express it in a way where we have a good risk reward? Right now, this is the key decision level higher, is this naked POC right here from several sessions ago. So, if you said, well, if I bought here, that would be my target, because I'd expect the auction to pause when we got here. Well, then how can I describe risk that makes sense? I've got a whole lot of range that I've already covered that this thing could rotate back on, and then I'm taking on more heat than I'm getting in reward. So in this sense, kind of how we'll play this is we'll say, all right, what comes first? Do I get a rotation lower, back into this area where I could find buyers to establish, a tighter risk and a better risk reward to get to this target? Or do we go straight to this target, which looks like we'll do that? And then we'd call an IB extension fade, where I'd be looking to fade the auction back to a clear target would be today. So very similar to what I was looking for in the NASDAQ. But other things to think about, are happening inside of crude is we're still an inside week. We're actually inside of, I'm sorry, we're not inside. We got higher prices early in the week. But that was Monday. That was, kind of Globex trade. From an RTH standpoint, we really haven't gotten outside of that. But this 52.87 area was an area that we've been talking about as an area to watch, and the buyers are defending that. So as long as they continue to defend this from a multi-session area, I'd look for them to keep moving higher, get this 52.87 and press to some new highs. Where you typically determine where to set your stops. So let's look at that. That's a common question, is like, what do I do with stops, and how do I? So the stops depend on what triggers you into the trade. So we'll look at a condition and say, hey, I want to be in the trade. In fact, let's go over here since ES didn't get where I wanted it to be, but there's a potential trigger. So one of the triggers is what we call a price correction pullback. So if you see an auction moving higher and then it does a correction like this, though the prevailing strength is to the buy side, and then you look for an opportunity to go with it. One of the ways you can use is a buying order flow spike. So see, there's a little more increase in buying volume here. There's buying order flow. This is buy side. This is sell side. So the buyers were in this 5 minute. Again, this is just one method for determining your stops. But you could say, all right, I'm going to be long so long as the base of this holds. And then what's my target? Well, in ES, we're looking for 2675. We're looking for new weekly highs. So from a risk reward standpoint, I can have this as my risk zone, and then here's my reward. I actually was looking for them to get down here to the 61 area, and they didn't get me down there. But that's one type of trigger. Another type of trigger is kind of a fade trigger, and that's where like here, where you see an auction moving higher, and then you see one 5 minute and then another 5 minute that breaks that low. I'd say, well, where did that move start? It was here. So I will defend this as my stop. And then, the question is like, where's your target? That's one of those one of those 4 questions is, I always start by defining where the opportunity is. So what's my target? Okay. Then, what's my risk to go get to that target, and can I define that with a short-term trigger? So, and
that's a great question.
Yeah,
I mean, it really is. I mean, that's part of your plan that you need to have to know where that, how to get to that point. I guess it's more important, because typically what we see in the marketplace, with unsuccessful traders is this: that looks like a trade. Let's go ahead and take it.
Mm-hmm.
And that's not a plan, nor is it a risk way to mitigate risk. And and I'm sorry, I'm fighting a cold, but the one thing you can do that you can control in the marketplace, and the only thing you can is your risk and your risk parameters.
Mm-hmm.
So if you can get to that point where you can manage that and set it, more importantly, you have a better chance, for one, of success, and 2, you have a better chance of sticking around this industry a lot longer. That to me is a key, and that's why it's always, we stress it a lot, like, hey guys, get a trade plan. And because it's not that, okay, here's your trade setup. That's one aspect of it. Now, how do you get to your entry and your management of that? And it, in my opinion, it's critical. I mean, I've seen everybody that I get the chance to get on the phone with and discuss this stuff with, the first thing I ask is, okay, can you send me your plan? And I hear crickets in the background. So, there's the first problem. So anyway, great question. Thanks, Jack.
Yeah. One other thing I'll add to that. The plan, because it's like, what's a trade plan? It's like a battle plan for you're going and doing battle, and just like military battle plans, it's operating with commander's intent, right? So we know that once we go out on the battlefield, it may change. And I was going to give you an example of what I talk about a plan. So I publish plans for our team in the evening. So I base the plan for the next day based on how the prior day auction, but I'm just going to pull up the plan here on bonds. So this is what my plan looks like. So I do review of how the prior day was. I have kind of a plan of a bias, areas I'm looking to be interested in, some key statistics, and a narrative. So the narrative, today was, as of Thursday's close, bonds were in an inside week, And so if buyers can hold 145.17, they look like we could go higher. And I've been looking at this 146.9 for a while. If not, then we're looking to go back towards 145. Right. So here's the 145.17 area. If we could get hold above that coming into today, then we're looking to go up here. If not, then here. That's a plan. And then inside of that, I lay a trading setup to help me trigger into that trade. And so, one of the triggers was an IB go with. Well, you can see like where we opened was kind of in the middle of these, which is kind of difficult and frustrating. So, didn't really offer an opportunity in the auction. So that's what a plan is. And it also is what can help you say, and there's not really anything for me to do because it didn't work according to the plan that I had. But you start with a plan. You start with here's areas that I'm interested in being in, and I'm going to see how we behave if and when we get to those areas. The plan today in the NASDAQ was, hey, we've got from yesterday's auction, okay, that's 67.94. See if we close those singles. And they're so close to that level, Jed. Come on, man. Let's get this.
Getting close. Getting close.
58.10.
We are, well, what'd they get up to? 01, 02. Okay.
Yeah. But coming into today, we had a balanced inside day yesterday and a very balanced price right here at the 66.92, which is really the multi-session was 66.87. So I came in today and I was like, look, if that's the key reference area. So if we're above this, if we're accepting the auction above this, then we can go higher and this 68.10 comes in range. Look how close we are, right? If we got below this, then we had 66.42 and we have a 65.65 even below that. But that was the plan. Where are we relative to that? So, here we are. We gapped above that. All right. I'm looking for this, this level. That's a level that's in play. And that's a level that I'm looking to be active at if and when we hit it. So far, things are working according to plan. And it's kept me on the sidelines until the conditions fit. And so I've got this, if we get up to here right now, it looks like we've got a really high probability opportunity to fade this thing right here. And you may say, hey, look, that's only like 30 points. Okay, but that's like $600 a contract. And on a high probability condition that I waited for. It's like the bag of money in the corner. So if I'm just patient.
Yeah. Jack, that's a great question too. I think I don't want to say secret sauce. There is no secret sauce, but Jack has question, given balanced volume profile and excess levels, are there things in the profile that would suggest that the market may break out, rotating away from value? And so maybe you would not take trades at the edges of balance. That's a phenomenal question. And here's, I think Josh and I can both answer this and probably a little differently on each case. So what we know about the auction theory is that price balances and then moves away from balance. So we know it's going to break out. Now the question is when, right? That's what you're wanting to know. And when do we have a good indication of that? Well, that can depend on a few different things, like, for example, what day it is, what time it is, Now, again, you can have a binary event. President Trump says something about China trade and the market's going to break out no matter what time it is. Okay. However, on a Friday we're in lunchtime, Eastern Standard Time, traders are exiting their desks for the day on the institutional side, and we may not get a break. It may just, it may just keep drifting higher or maybe lower, depending on which direction is. The other thing is, which is most important, Josh is going to probably pull this up and talk about it, which would be order flow. Are buyers stepping in at those levels to maybe break that out? Or there's just not enough, what we would call participation at those levels to break that out. Okay.
Yeah.
And then it doesn't mean you have to take that trade. If you are looking for a breakout, I'm a terrible breakout trader. Okay. I always wait for a break and a pause, or a break and a pullback. That's my preference. Okay. Because I can establish risk. As far as go with trades, I'm horrible at them. So Josh, I know you're going to probably add to that, but
Well, the only thing I would add is day type is enough. So like, let's look at this NASDAQ trade here, for example. So right now, expand this profile. Okay, what do you, this is 30-minute, each 30-minute period right here, expanded. What do you notice about each of those 30-minute periods? How would you describe them in relationship to each other? And Jack can answer this, or anybody can answer it. Higher highs, higher lows, higher high, yeah, absolutely. Good. So far, this is what we would call classic one time framing. So every time period, the auction is getting a higher high and higher low. So this is trending behavior. So far from a day type, we could have a trend day. If it's a trend day, if you try to fade this thing, even when it seems like you're in an excess area, you're going to get run over. It's just not going to turn around. It's going to float up on low volume. And then the things that JP talked about is like, it's end of the week. There's there's low participation. There's just nobody to like correct the auction. So, we'll just drift higher, and you'll just have pain as you're trying to counter it, because you're just like, well, we're up in a potential excess area. So like that's the only other thing that I would add is, so like if we get up here to the 6810 area that I want to be active at, and this would assume that we're a normal variation higher day, which normal variation, you have IB extension below 2x of the IB. 1.5 is up here around 6820. And one of the confirmations would be, can we get a lower low on a 30-minute period? Can we get back to the IB high? That would be more conditional, or more indicative of a normal variation higher day. Otherwise, it's a trend day, and a classic trend day is not going to see the high until the last hour of the day. It's Friday. I'm not going to stick around for the last hour of the day. I'll just wait till Monday.
What? You're not going to hang around with the pikers?
No.
Okay.
Nope. So here, ES, contrast the ES. ES has had 2 inside periods, so not higher highs, higher lows. So this is more indicative of a normal variation behavior, which says, hey, I can have greater confidence fading at the edges. Same to be said, with crude. Let me expand crude here around this, this 5380. I've had lower, I've had inside, not a higher high, higher low thing going on. So that gives me potential opportunity to have greater confidence in a rotational trade. Man, Micron is going nuts.
Yeah. Good questions, Jack. Anybody have any other questions? I mean, feel free, throw it out there. No, and I'm just going to, I always state this every week. Listen, there's no bad question in this. And if you're embarrassed about something, you think it's stupid, throw it out there, because guess what? We've made the mistake. I can promise you that. If you've been around this industry long enough, there's one thing that is for sure, and it's guaranteed: you've made every mistake in the book. So there's nothing to be embarrassed about if you've lost money, if you think that's a stupid question. What we're trying to do is help you, give you some insight of what the profile can help you do. And if you have specific questions about trading, it doesn't, even if it's not profile related, just let us know. We want to try to help you out regardless. So, trading is a booger, man. I'll say it's tough. It's easy because all you gotta do is click a mouse. It's tough because there's a psychological game to it.
That's right.
I mean, anybody can put money in an account, get the dome up, start clicking around, either donate it to somebody else or
Yes,
or
the donation trade.
yes, or have a big hit and think that you're the miracle worker. So
I'm a miracle worker. What are you talking about?
that's right.
That's so funny.
I had my kids tell me that, Dad, you're boring. I'm like, why? They go, because you're not taking trades. I'm like, well, that's the whole idea.
Yeah. Um,
To be picky. You guys are quiet today. This is a Q&A, so feel free to ask away. Otherwise, I'm going to start asking Josh questions.
no, don't do that.
So, Josh, why is it snow in Colorado? Composite VP on the far right. Yep. How do you determine duration, number of days? Oh, that's a good question. I think it's based, and Josh can talk about Window Trader Blue, but that's based on really what your platform will allow. Certain platforms are better than others on that, but Josh, go ahead and I guess give them the parameters on how that works with Window Trader Blue.
Yeah. So it's selected. It's selective. I can put it. I can determine how many I want to do. I think so when I think about market participants, so people who are active a lot, they're thinking about where's price for the last week and where's price for the last month. So my composite on the right is the composite of the last roll. It's the rolling 5 sessions. So it's basically a rolling weekly profile is what I'm looking at. And then I also look at a monthly, which turns out to be 20, 22 sessions, something like that, as a way to kind of see where I am in relationship to kind of near-term value, as it were, because those are the prices that like if I get extended from near-term value for a week, or I get extended from near-term value for a month, then I start to see some counter behavior coming in. So that's why I use those. They've proven. In one of our modules, we look at the relationship of price to value over like the last week or the last month, and you'll find consistent behaviors in those relationships that you can leverage. So that's why. I saw another one from how many trades a day does your method typically generate?
About 1,000.
Yeah.
Yeah.
It generates. I mean, for me, it generates 1 to 2 good trades a day. And these are what we call intraday swing trades. So we're not tick traders. We're typically, like on NASDAQ, we're looking for points. ES, we're looking for points. So we're looking for an intraday swing trade, and it's gonna generate 1 to 2 good trade ideas across. Like part of our trade plan, we look at 4 different products. So, we find them more often in crude and the equities, but we also look at being bonds, and our anchor trade shows up in one of those 4 products every day.
And sometimes it doesn't.
And yeah, in rare instances it doesn't.
Yeah.
But
and then I know like Josh and I do other markets outside those as well. But they, we use the same principles with all of those as, we just, the main markets that we discuss, those are probably the most liquid markets. And like Josh said, those scenarios usually show up once, twice a day on each market. So that doesn't mean you're going to get every market. I mean, because it's hard. It's hard to watch 4 markets intraday. It really is, especially when you get a couple of them that are really active. Nicholas sent you. Oh, okay, it's a personal. Okay, gotcha. And back to the platform. So there's not one platform that is better than another. It has to, it has to do with what you're comfortable with. There's certain platforms that do a better job with market profile. Like Window Trader Blue is a phenomenal one. You got RT is a good one. Market Delta is a good one. I mean, it just depends on how much you're willing to spend and what kind of functionality you want with it. So don't feel like you have to have one and go crazy with the expense of it. So just be aware of that.
Yep. Expectation this morning in the ES was a correction, old business to the overnight inventory, which was 100% long. We got back, the pullback low was, so we're going to look at the ES here real quick. Got that, and the pullback low was 26.56. Yeah. Looking to look for in the auction to confirm that the pullback low is ending and we should be getting ready for the long. How triggering the trade, I guess. Okay, so, and this is like on this morning. So let's pull ES. ES here. So when Joel says net long inventory, what we mean is from the close yesterday to Globex close, it's 100% long. And that's what we call imbalanced Globex activity, which you would expect some rebalance to take place. So this little bit of wiggle back, lower was trying to rebalance this a little bit. Didn't fully repair that and held the gap. If you wanted to be really aggressive this morning to the long side, here's a way to think about that. And you're thinking this isn't specifically a setup as it is like behaviors of the auction. Okay, so we could call this a gap go, an early gap go with trade. All right. So here's the gap. We got the imbalance. So what could get you back long is when you came back through the area where the rebalance started, right here, and then you used that initial pullback low as your risk. That's about all you could definitively define. And then the question is, well, what am I targeting? What's my opportunity? It's always about like what's, I always start defining the trade with what's the opportunity, not what's the trigger. And this is a challenge that I see with a lot of price action traders is they can define triggers all day long. They can find price triggers all day long, but they don't know how to think about that trade because they don't know how they don't know how to think about it in terms of risk to reward. They just look at it as, well, here's my risk, but what's the upside? It could be 2x, it could be 3x, it could be 10x. Start with the opportunity. So if you said, hey, I'm gonna my target is new weekly highs, for example, then from a risk reward that actually starts to make sense, and that you could see that this trade's working. I mean, it's you're in a place where you had opportunity to, and you would have had quite a bit of time actually to protect this trade. So that's a way that if you were going to be really active on the open, and we would call that a open gap go with trade with defined risk. Like that would be how you define the risk. But the broader challenge is, well, what am I targeting? What am I trying to go after? I can tell you I did not take that trade, and here's why, is because I knew that we had this naked POC here. Okay, so even here from a risk reward, if that would have been my first target, so then I'm kind of a 1-to-1. I just and we've basically been trading those same prices all day long, so that's just not as appealing as a trade. But that's a great question. It's an absolute great question.
So Nicholas, when we gap out of range like we did this morning, are your scenarios for open prior to the open actually happening more focused on driving behaviors rather than OA? Well, we have, Josh can elaborate a little bit more on this, but we have gap rules based on that. So, and they include both of those, yes. I guess the short answer is, but Josh, you want to elaborate on that?
We gap out of range like we did this morning. Are your scenarios for the open prior to the open? Being more focused on driving behaviors. Yeah, I mean, yes. I mean, open type. So here's a challenge with like a gap, and we think about gaps in terms of criteria of size. Like, is it a tier 1 gap, tier 2 gap, tier 3 gap? Is kind of how we think about that. And those all have expectations of what's the probability that those will close. You also think of the expected range of a product, and which expected range is a calculated probability of what's expected in terms of range in the day. It's based on the implied volatility of the product. So, like, for example, let's look at the quick sheet this morning. We had an expected range in the ES of 30 points. So 70% probability that we stay inside of 30 points of range. All right, everybody do the math with me. So if the open is at 26.33, 30 points would get us to 26.63-ish. All right, so we're trading outside of the expected range right now. So on that gap, on the open, you're like, man, I'm already at the statistic. How much more is this thing going to go? And so then, yeah, you can focus on, open or driving behaviors to inform that. Like if what I would have loved to see, because this is what we call it, a tier 3 gap in the ES. So very unlikely it's going to close, which means you're likely going to get some rotational stuff the rest of the day. Which is why we're kind of looking for a fade from excess if we can get it today. Does that answer that question?
Sounded good.
Yeah. Well, it always sounds good. I don't know.
Oh, good question. These are all good questions. Keep them coming. Keep them coming. Why do we use these colors? I don't know, because we like them. I don't know. We actually had that question. Why do you use those colors? I don't know.
They're pretty.
They're pretty, and we're colorblind, and we have to see certain things. So,
no.
The expected range is from the Globex open or the regular trading hours.
Expected range is the full Globex.
Yes.
Full Globex range.
Yes.
So I actually have a little dashboard here that actually shows me what the true range of the product is. And I could probably put it in here and even color code it, just let me know like how much is left or stuff like that. But I can look and see high-low range to go, oh, I'm at 37 points. And then all I got to do is, go over and reference my quick sheet and go, yeah, we're outside of that. Now, we're under the ATR. So the ATR for ES is 38.25, but we're outside the expected. When we look at expected range, and we actually spend a week kind of looking at these statistics, because expected range actually is forward-looking, and ATR it's a lagging indicator. So I don't find it to be as powerful as a leading indicator like expected range. So.
And we also use, expectations from options as well.
Mm-hmm.
Expected ranges from the options market. They're pretty solid on that side.
Yeah, that's where that's a good point. That's where that probability comes from, because you got two-sided markets pricing in expectation of range. That's how you develop that. Yep. Black-Scholes and all that.
All the fun stuff, yes. Get your math books out, boys.
Mm-hmm.
Man, these are great questions. Actually, some of the best questions we've had. Usually somebody wants to know, is this a valid trade? No, there is no valid trades right now.
Well, I'm looking at who's here with us, and some of you guys that are part of our community, and
Yeah.
you're doing the process, so you're already kind of refining your approach, which is leading to better questions.
Yeah.
Yeah, they're not bad questions, but there are better questions that you can ask.
Ooh,
And
there's a challenge.
yeah, the question is just to show where am I in my level of development, which is great. Everybody's at different stages.
Yep.
Look at that fat cattle.
Fat cattle.
Look at that.
Full disclosure, I don't trade fat cattle. Josh loves it.
I love fat cattle. Look at this beauty. So if you follow on Twitter, you'll know that I'm short me some fat cattle. And what I was looking at was
It sounded wrong, but go ahead.
yeah. So here's near-term value, 5-day right here. In fact, this will be easier if I.
So yes, we do talk not only just the main ones, but we do talk some of the weirder ones like fats, and then I'm a full disclosure. One of my favorite swing trading instruments is the Mexican peso, and so anyway, we talk about stuff like that too. So
Look at last week. Okay, the most volume traded was right here at this 126.60. This week we came in, we got lower prices early, but you can see that there was some excess, formed to the downside. They couldn't facilitate trade lower, but that's given a tip to the sell side. And I was looking for, push higher into this decision zone that then rejected back below this value. Then that allows me to establish risk on more of a swing trade perspective, because I'm looking for fats to get to like 125, 124, and even 123. And so this is where somebody gets trapped in, and again, we're in a balanced area. So you're looking for some kind of move. A move is coming. These guys were trying to guess it was going to go to the upside, and they're now trapped. And so I'm going to use that trap to my advantage.
And we have a really good question. So Nicholas asks, do you guys look at skew or VIX skew? Yeah, I know what skew is. No, I mean, we don't. I've never looked at skew. And I don't know how to explain why I don't look, but I never have looked. I've never found it to be an edge of anything or any type of assistance inside the trading. Even when and we do, Josh and I personally, away from the channel, that we do a lot of options trading ourselves, but that's not something I take into consideration. I take in volatility for sure. So that is, but it's more implied volatility that I work off of it more than anything.
Mm-hmm. There we go.
Yeah, Jack. Nasdaq's getting close to Josh's, even 68.10 too. So. Nicholas, to your point, there's a lot of different things you can look at. I mean, there's just so much. If I put everything on my page, oh my goodness, I wouldn't know what to do.
Mm-hmm.
You got to ask yourself, is it relevant to my trading? Is it something that I can lean on to make my edge more vibrant? Okay. Right. And what I mean vibrant is, can I use that to as my methodology or my setup, and then allow myself to move down into the risk portion of the setup, which is the entry, right?
Mm-hmm.
And if it's not, then get rid of it. It's worthless.
Yep.
I mean, you'll see somebody using, I use this as the greatest thing in the world, but are you going to use it like they use it? I mean, you can look at it. I mean, don't say you can't look at stuff like that, but just make sure that it's enhancing your edge. And if it's not, then get rid of it. Take it off the chart. Some of the best traders I have seen, I mean, their charts there's nothing on them. I mean, there is stuff on them, but they're very slim pickings. And I think Josh would agree with me that less is more when it comes to that kind of stuff.
Yep.
All right. Anybody have any last questions? It looks like we're getting to the bottom of the hour here. I guess we're getting close. Anything? Bueller starting to make poor highs in the ES. Yeah, all it takes is they got to get up there a few more ticks above it, and that poor high becomes takes that
Well, I
away.
mean, you can see some impulsive buyers, starting here. And this could be the buy program is like taking over.
Yeah, and again, they could just drift this
It
thing
all day long.
This could be just a drift into the close, and then they just dump it into the close. Remember, we have news out next week. Hang on a second. What other news do we have out next week? I didn't even look at that. Let me look at that real quick here. So, we have, sorry, got to pull it up.
Still haven't got there. Come on, get there. Okay.
So besides earnings next week, or we have the end of the month, so that's important. Obviously, we have petroleum. We have unemployment next week on Friday. FOMC next week. Oh, we have lots of great things. So
we have FOMC next week.
Yeah, the meeting begins on the 29th on Tuesday. Announcements on Wednesday. So we have announcement. We have EIA Petroleum, which is every Wednesday. We have unemployment, and we have earnings. So next week we could have some fun. So
wow.
That makes sense why today and yesterday was sort of blah. I think the Fed has spooked the market a little bit, and I think they want to see what the next move is after the meeting. I'm going to anticipate we see coming into Monday. We do also a weekly outlook video that goes out to most everybody, and we'll take a look at the week ahead. And part of that is, we'll sort of see, okay, if we have this meeting coming up starting Tuesday, well, we know typically what happens. Any type of movements would probably happen on Monday, and also maybe Tuesday morning before the meeting begins, and then we'll probably dribble or drift into the announcement on Wednesday. We'll have some movement after that announcement, and then Thursday they'll digest the meeting and the Uncle Jerome's his speech, and then from that we dribble again going into Friday morning's announcement, stuff like that. So we run through that kind of stuff also to help you understand maybe the rhythm of markets and how they can act leading into those things. When we were talking about this earlier this week, I think it was Wednesday, we were saying, wow, this is really acting funny. We do have tech news next week. They could be just waiting on tech news. Now, I didn't know we had this next week, so that's also making sense.
Yeah.
That's it. That's all I know.
That's it. Here's something for you to practice. I mean, we would recommend, hey, if you haven't done a trial with us, spend a week with us, spend next week with us. But here's two things you can do on your own. So one is to say, where do I see the auction balancing in my preferred time frame? What I mean preferred time frame is like, what do you look? Are you an intraday trader? Are you a multi-session trader? Let's say, for example, in a day time frame, identify areas of balance and excess, and then where do I see it in one time frame higher? So if you're looking to trade intraday, go out to the week and see where it is in a week, and recognize and just take notes on the how the auction behaves when in these relationships, and see if that can help you. If you want to really dive in, Razor, on that, that's what we're going to be talking about all next week. We'll do JP will do a weekly outlook to kind of set us up. We're going to spend an hour on Monday kind of setting the stage. We're going to spend 2 more calls like this one throughout the week, and then discussion throughout the day working on this, while also looking for kind of our key core setups. And then if you're not connected with us, Twitter's a great place to interact with us. We post some decision levels in the morning, and also on Facebook. And always, if you need help or have any questions, just give us a call or send us an email. Happy to respond and see if we can help. But really appreciate everybody taking the time out today. We'll be back next Friday, and
I'll be back.
I'll be back. And that'll be post non-farm payroll, so that should be fun.
Awesome. Yeah, that'll be fun. There'll probably be a lot of good questions out of that. So if you get a chance, join us, and we'll go from there. So appreciate it all, guys. Wish you guys a happy weekend, and go from there.
very much. Peace.
Okay, take care.